from where you sit.
Well, many say that we live in a concrete jungle. Whether we're in the office, we're at home, we're in a school, we're surrounded by structures. And one key element of these structures is cement. This is the Trading Bell. My name is Maalika, Kazia. Welcome. And today I'm at the headquarters of Bamburi Cement in Nairobi. I want to talk to Seddiq Hassani, the CEO of Bamburi Cement, to talk to us a little bit about the figures and the numbers coming out of the company, but not just that. What does he expect in terms of the economic climate? Let's find out. Seddiq Hassani is the current CEO of Bamburi Cement. In the past, Seddiq worked as an auditor and strategy consultant in Arthur Andersen Casablanca before joining Lafarge Morocco in 2000. While in Lafarge Morocco, he held several positions including control manager, CEO of Lafarge Gypsum Morocco, purchasing and logistics director, and marketing and strategy director. From 2015, Seddiq has been the Lafarge Holcim Head of Growth and Innovation for Middle East and Africa. He was appointed to the board as Managing Director on the 9th of February 2018. Welcome and thank you so much for joining us, Seddiq, this episode of the Trading Bell.
Thank you for the invitation.
Okay, now if we talk about Bamburi Cement, let's just get right into the conversation with exactly, appraising us on the operations in the region of Bamburi Cement, what you aim to do, and how you are seeing 2019 progressing thus far.
Well, Bamburi Cement is present in Kenya and Uganda as a group, and we have 2 plants in Kenya and 2 plants in Uganda. We are in this area for many years now. 2019 started relatively well. It depends, of course, on the market dynamics. We are quite optimistic based on the programs and initiatives which were launched by the government in order to boost the global activity in the countries.
Okay, now let's get to the numbers because, the past couple of years, we have seen the earnings and the revenues dip by a great percentage. If we look at 2017, we saw that as compared to 2016, the earnings dropped by 67%. In December last year, you issued a profit warning. So where do we stand when it comes to the numbers, and why do you think such substantial drops are being noticed?
So in 2018, there were some external factors. Coal price increased as well, and the fuel. And we saw also, as we import part of our clinker, the clinker cost increasing as well. So this has affected a lot our operations in 2018. But on the positive side, we were able to reinforce our commercial footprint in Kenya through an increased market share, but also a more or a wider range of products that we launched in 2018.
Yes. Okay, so as you mentioned the products, just this month you did urge the government to use hydraulic road binders, and that's opposed to the ordinary Portland cement. So it goes back, of course, if we go back to 2014 when the government through Kenya Rural Roads Authority did challenge some of the cement makers to come up with more cost-friendly options. So if we break that down, how does this hydraulic road binder, soil stabilizer instead of the OPC, how is that going to benefit the road users? How is it going to make it better?
Yeah. So when we launch a product, we need first to look at the application itself and how the product can fit that application. So for roads, the OPC is not the best solution for road stabilization. The hydraulic road binder, which is commonly used in all the other countries, mainly in Europe and America and Asia as well, is more convenient for roads based on the intrinsic characteristics of the product.
Okay.
Now, back to the costs. First, we need to look at the global costs, not only the specific cost of given product. When we look at the global cost, what a road binder will save as cost? First, it will save a lot of transport costs to bring aggregates from far to the site. This is one of the savings. Second, it will accelerate also the road construction. This is also a saving to the road contractor. Now, on the product itself, of course, there is not only one road binder, so it depends on the soil itself. And based on that, we adapt the road binder. So in some cases, it can be much cheaper. In others, because of the characteristics of that soil, it can be a bit more expensive. But globally, the cost of the road will be cheaper.
Okay. So what progress can you appraise us with regards to how far the government is in uptaking this product now?
Well, we had this conference just 1 month ago, and I think that there is a strong willingness to move forward. Us as Bamburi, we are ready. The product is, from the technical perspective, is ready to be launched. So as soon as let's say the new guidelines are issued, we'll be ready to launch it.
Okay. So, of course, now you're talking about the product range diversifying and the options that are out there. But going back to some of the challenges that you're facing in terms of, let's say, costs of energy and things like that, that you have cited as leading to the decrease in earnings, how are you tackling them in this year and trying to make sure that they do not affect the company's margins as much?
So there are two ways. The first one is, let's say, the external factors, but we shouldn't rely too much on them. They can be positive or negative depending on the global environment. But internally, we have to work on our own optimization in the production. So we need to work on the efficiency of our operations, the efficiency of our equipments, and how to consume less energy to produce 1 ton of cement. So this is what we are working on, and we are convinced and very optimistic that in 2019 it will bring a lot of value.
So essentially become more energy efficient as well. And you know, when we talk about a lot of companies and their progress towards the 3 Ps, people, planet and profits, a lot of people who are more cognizant of the fact that we need to also be aware of our carbon footprint, of how we're affecting the environment. And what kind of initiatives is Bamburi Cement then involved in order to prevent degrading the environment further, or even just better it in general?
Well, you know, I think that Bamburi is a pioneer in protecting the environment. I think that all Kenyan, and maybe a lot of tourists, they know Haller Park, which is a unique quarry rehabilitation done that way, creating or recreating the full ecosystem in an old quarry.
Yes.
Second is the way we use a lot of waste, and instead of moving that waste into landfill, we are using them in our kilns. You know that a cement kiln, the temperature goes up to 1400 degrees, and we can burn a lot of waste.
Okay.
So this is also one of the initiatives that we want to accelerate in order also to protect the environment.
Okay. So aside from now the environment in general, but more toward the economic environment of the country, you know, the World Bank has cited that the growth of manufacturing within Kenya has slowed down. It's gone up to 2.7% in 2018, but that's still much not where we were between 2013 and 2016, which was at like 3.6%. So do you think that this decline in manufacturing, and of course it's also tied to the Big Four agenda, has directly impacted the consumption of cement as well?
Yes, I mean, we've seen in the last 2 years, 2017 and 2018, a drop on cement consumption. Now, as I said, we are looking forward to 2019, and and 2020 in a more optimistic way. So all these initiatives launched by governments through the Big Four agenda will drive the growth in the industry. Of course, I think that this is a global trend to see urbanization. So according to the UN, the urbanization rate will move from 26, 27 in 2017 to more than 44% by 2050. What does it mean? It means that we will need to build roads in order to connect the cities. We will need to build dams because the growth of population, which will need, of course, more food and then more irrigation, and then the dams will come into that. We will need also, because of the scarcity of land, because of the urbanization, to build more high-rise buildings, and this will drive also probably the growth of the industry. So these are kind of drivers that will, let's say, build the momentum in the cement industry.
Okay, so and as we even talk about the Big Four agenda and manufacturing being key, one of those pillars, what do you think the government still needs to focus on in order to bolster and to keep on boosting manufacturing within the country?
We need to be in Kenya cost effective, so that we don't rely on imported goods, but we produce them in Kenya. So I think this is the first one. We talked about power costs.
Yes.
Power cost in Kenya is one of the highest in the in Africa, the whole Africa. And this is one of the weaknesses today that we see. And this can be a good lever in order to be more competitive. Second, all those initiatives, because the manufacturing, it has to come with a specific need. So we talked about affordable housing. This is a specific need, and we see that the trends will evolve from a traditional way to a more mechanized way, through using ready-mix to precast industry as well. This will also drive the manufacturing sector. This is just about, let's say, the construction industry. Of course, all the other sectors, they face the same challenges.
Okay, and you know, what would your message be then to your future and your present customers in the country and the region? Like you've talked about various factors affecting your business and the economy in general. So what would you like to tell your present, future customers about what you expect for this year then? First,
it is not to tell them what we expect, but it is about listening to them, what they expect from us. Because we need to adapt our business to their needs. So we've talked about high-rise buildings, we've talked about roads, we've talked about dams. So all those segments, we need to understand customers' needs so that we can adapt the product range, we can adapt our services in order to serve them better. So it is more us listening to them than the opposite.
Than the other way around.
Yeah.
Okay. Well, thank you so much, Mr. Seddiq, for talking to us today on the Trading Bell, and of course giving us your thoughts on a range of topics as well as key factors around Bamburi cement.
Thank you.
Well, on that note, we're going to take a look now at market analysis.
Most of the talk has been negative towards Kenya Airways. They've not been doing very well. Why would they take over the airport, etc.? So that would, of course, inform, I believe, some of what investors will do on the market on a speculative level.
time now for the market analysis, and we are on the trading floor at the Nairobi Securities Exchange. Joining me is our analyst Sam Gishohi from NIC Securities. Thank you, Sam, once again for joining us for the Trading Bell.
Thank you for having me.
All right, let's talk about this week's numbers. We're seeing the NSE 20 share index in terms of the change. There has been a change of 3.69%, and compared to last week, it's actually gone up back into the 3,000 range. So we had seen that it had gone up, then it dipped, and now do you think it'll stabilize?
We're still looking at a bit of stagnation because foreigners or foreign investors have sort of slowed down. Most of the gain that took us past the 3,000 mark was because foreigners were buying heavily, particularly the usual suspects, Safaricom, KCB, Equity, Cooperative. So it was the banks, and those will tend to have, because the market is volume weighted, it tends to, the index, it tends to be moved by Safaricom, say, more than the others.
Yes.
But in the last, somewhere in the last 2 weeks, we did see a dip, because of course you can expect some profit taking to have happened. I mean, if KCB had gone up by say 4 or 5 shillings, somebody is definitely taking profit, which will also cause it to either stagnate or dip a little bit. So we've seen that dip.
Okay.
And now again we are seeing foreigners taking a back seat. They're still buying slightly more on some of the bigger counters, but at the same time it's not that much in terms of volumes. So the market has sort of stagnated.
Okay, and even as you mentioned, some of the big movers, we've got Safaricom, yes, up there, but we've got quite a few banks. We've got KCB Group there, Limited, Barclays, Bank of Kenya, Equity Group Holdings. Any indication as to why we're seeing so many of these in the movers?
Well, investors are taking positions. They're normally the big movers, but sometimes you'll see them get off the movers list because then focus is not on that sector. Right now, focus is on the banking sector because we are going into March. They have to announce their results before the end of March.
True.
So that 3-month window is about to close, which means in the next 3 weeks, we will see results coming in. So there has to be focus. There's those people who are positioning themselves for the expected dividends, for example, hoping that, say, someone like KCB will pay the 250 they did last year. And then there's those investors also who are looking for a rally probably before the results, because dividend seekers tend to push the price up. And also some people will be looking and saying, look, if the dividends are good or if the results are good, then we could see a spike in the price. We saw that with EABL. It's jumped from 168 to about 222 in a few days. True. Because they announced good results and they had a 2 shillings and 50 cents dividend. So there's people speculating on that. So it's really speculative action at the moment where people are taking positions in the hope that when results come.
Right, so those were the movers for us. Let's take a look at our gainers. We were just discussing a few short minutes back that, you know, some of the gainers we're seeing are not your typical companies that are there. We've got Limuru Tea, we've got Longhorn Publishers. Why do you think we're seeing a different set of companies, if you will, come into these particular segments? Well,
you'll notice in the gainers and losers, you're going to be seeing companies like Everready. I think there's Can Group, then there's Olympia Capital, which are the less liquid, less volume, you know, moving companies.
Yes.
So the tickets are not that big. It just indicates those are not the shares that foreigners will go for. Because they don't have the sort of volumes and the sort of turnover that they would like, the sort of deal size that attracts them, and even the size. So that just indicates there's more local movement, more local activity on the market at the moment. When it's local and not much in foreign, it means that you start seeing those companies, you know, National Bank, you know, Longhorn Publishers, Nairobi Business Ventures, they start popping up on the top gainers and top losers, because that's where most of the activity, depending on what demand and supply is. When it is foreign moved, then you'll start seeing the Safaricoms and KCBs on that list.
Okay, so perhaps we would look at it as positive, because of course there have been calls for more local investors to get involved in order to also regulate the market so it's not as volatile when foreign investors, you know, leave.
Well, I would say so, although the volumes are too small to say that. I think they're not that big. They're really very small volumes. Sometimes some shares like this, you'll find only 200-300 shares traded. I mean, if you look at okay, we don't have the volume here, but if you look at the number of shares that traded, there could be very few.
Yeah.
But you see sometimes high returns or high price changes could be a function of low liquidity.
Okay.
Because it rarely trades, you know,
Yeah.
and suddenly somebody has traded 500 shares and the share price just jumps. So again, it's not a very good indicator, because don't forget, most of these companies will not be on the NSE 20 index. So their movement will not actually affect the statistical measure of the market.
All right, so not as positive perhaps then. And finally, if we look at one of our top losers, we've got Kenya Airways up there. And is this, would it be in response to, of course, their bid to take over the JKIA and the back and forth that has been going on this entire week? We've seen, you know, it being in the headlines. There's been quite a bit of talk around that.
Well, most of the talk has been negative towards Kenya Airways. They've not been doing very well. Why would they take over the airport, etc.? So that would, of course, inform, I believe, some of what investors will do on the market on a speculative level.
Okay.
So yes, true, it could be an effect of that information. Because markets, again, are moved a lot of the time by what's in the news. And most of what we're hearing about Kenya Airways is the likeliness of losing the deal. Why are they losing the deal? They've not done very well, you know, profit-wise in the last few years. So again, it is possible, very possible. Yeah.
All right. Well, those are some of the numbers that we've broken down for you on the market analysis. But for now, let's move to Markets 101. Well, time now for the question on the street, and of course you can also tweet it to us. That is at NSE_PLC. And the question we want to address today is coming in from Nedi To, and the question is, if I want to invest in M Akiba, what is the minimum amount? Well, of course, there's been a lot of talk about M Akiba as well, so a good question there from Nedi. Why don't you take that for us?
Thanks, Nedi, for the question. And yes, M Akiba is a good investment. It's a government bond. To invest in a Makiba, the minimum you can invest is 3,000 shillings in the first initial investment. Then once you do the 3,000 shillings, which you can do through either PesaLink or M-Pesa, once you do the 3,000, you can then go ahead buying in multiples of 500. So after the 3,000, you can now buy 500 shillings, and you know, as much as you can until, of course, the bond closes, the bond issue period closes, and then that's it, you can't buy anymore. But generally you can buy 3,000 and then in multiples of 500.
Okay, well, Nedi, I hope that was some great information that will help you. And of course, like I said, if you have a question for us, at NSE_PLC is where you tweet. That hashtag is Trading Bell. For now, let's take a look at the NSE historical facts. All right, with that information, of course, I want to say thank you very much to our analyst, Sam Gishwari, for joining us for another episode of The Trading Bell.
You're welcome. It's always my pleasure.
Yeah, I think a lot of these numbers, to break them down, we need some of your expertise, and so it's always valued.
Thank you.
Well, with that, it's time to close up this episode of The Trading Bell. I did speak to Seddiq Hassani, the Managing Director for Bamburi Cement, earlier on as well. And of course, you can keep on sharing your feedback with us on social media. Till next time, my name is Maalika. Kazia.